So I'm 50 years old, and I just wanted to share looking back on the smartest money decisions I've made in my adult years. So I'm 50. I turned 50 in October. I am divorced. I've been divorced since 2006. I was laid off 4 times. I was overweight, and I raised 2 kids on my own. That's all happened past 20 years of my life. I've made some really good decisions because I've learned a lot about personal finance over the course of the past few decades. And I just wanted to share a few of the things that I felt made a huge impact on my personal finance. So I bought a house back in 2003 right before my oldest was born. I felt like it was a pretty good, smart decision. I was really stretching myself even during those days. Housing is obviously not as expensive. If you look back on it, comparing the salary to the housing costs, it was still a stretch for me, at least anyways. We made it. I was married at the time, had some struggles. At the end of it, did get divorced in 2006. Bought my ex out of the house, refinanced, and just the equity in the house, I gave her half of it. And I stayed in the house up until 2016 when I moved into my second house. That first house was pretty much a struggle. It was tough. Fortunately, I was very lucky that I had my parents to kind of help me out. Thus, I was able to kind of slowly pay down the house, and also getting better paying jobs really helped as well. Combination of that, paying down a little more on the house, I was able to move out of that house and move into a second home. And I feel like that was probably one of the better financial moves I made, was moving into the second home. Couple factors. One was it was closer proximity to my kids as far as they could walk to school. So at 2016, my kids were 13 and 11. One was going into middle school. One was in middle school. The second one was about to start middle school. And so just walking was going to be something that was important to me. And fortunately, I found the second home, which is the house I'm in now, and it's close proximity to all the 3 schools that they went to. They're old now, they're 22 and 20 years old, but back when I bought this second home, close proximity to the school where they could just walk was a huge for me. And then there was a couple other things I wanted, a bigger kitchen, an extra bedroom, really all helped out. But the most important thing was when I got this second home, I stayed way below my means. The mortgage company offered significantly more, which I was qualified for, but I did not want to go way above my head. I think that first home really opened up my eyes on what I could afford and what I couldn't afford. And I was very fortunate. It worked out. I had a great realtor. I was fortunate during that time. The mortgage rates were pretty low still. My mortgage rate right now is 3.6. But as well, I think at the end of the day, I did not want a bigger mortgage payment. I was approved for it, but I did not want to go beyond my means. I think that was really one of the first things that really opened up my eyes, was just staying below my means. Now, I know kind of the rule of thumb is when it comes to rent or mortgage payments, I think a couple finance, personalities like Dave Ramsey or the Money Guys, they kind of share either 25 to 33% of your gross income should go towards housing. I think Dave Ramsey even states 25% of your net income should go towards housing. You shouldn't go anything above that. I pay 17% of my net income towards my mortgage. And then I pay a little more every month as well, just to pay it down. I think for me, that was one of the best financial moves I did, was just stay below my means when it comes to housing, because housing can get expensive. It's not only your mortgage payment, it's your property taxes, it's your insurance, improvements you want to make to the house, or repairs. The next thing I feel like that really made an impact in my finances and smart money decisions was buying used cars. Now, I typically buy cars that are 3 to 5 years old, and I stay way below my means on that. I don't finance for more than 3 years, and I usually pay it off within 18 months. So that's, for me, is just I stay no more than 3 years financing, and I stay with used, reliable cars. All my cars I've had: 2010 Prius, a 2018 Nissan Sentra, and a 2023 Mazda CX-30. I didn't finance for more than 3 years, and I was able to pay it off well below 18 months. Now, the Mazda CX-30 was an exception to the rule because I had a job where they paid me a car allowance, so I was able to pay a good chunk down. That's why I went for a 2023. I purchased the car in 2024. on that. So it was about a year old. The price was great. I was able to negotiate that price, and then I was able to get, 3 years financing at an affordable payment plan, payment that I was comfortable with, pay it off within 18 months. Cars can get out of control as well. Be mindful before you go into a car dealership. Understand what you can afford. Not only $350 a month or $450 a month, whatever you think you can afford per month, but the terms. You want to stay no more than 3 years. At least that's my view on it. And get a used, reliable car. Another smart money decision I made was consistently saving for retirement. Now I'm approaching 20 years of contributing to my 401k. I've increased my contributions occasionally. I wouldn't say every year, but with every raise that I got, I would slowly kind of increase my 401 contribution. I also started investing in a brokerage account and an HSA in the last 5 to 7 years. I think one of the biggest mistakes I made was at age 30, probably a little before 30, I cashed out my 401k. That was the biggest mistake I made. During that time, like I said, I was going through a divorce. I racked up a lot of credit card debt as well. Started with a blank slate. And for the past 19 years, going on 20, I've been focused on saving for retirement. Just in the background, just slowly increasing my contributions. I've maxed out my 401k a couple years in the past. I'm not doing it now. Part of that is just because I'm contributing to a brokerage account and an HSA. That's really set me up to where I am today. I think I'm a lot better financially than a lot of 50-year-olds. Part of that was just being mindful as far as making smart money decisions like saving for retirement. And the last thing I think that really helps me is having a healthy emergency fund. I have 12 months worth of expenses in a high yield savings account. Now, I've been laid off 4 times, and I've shared that in our previous video. The first layoff, which happened in 2009, that was really scary. I was not prepared. First time going through a layoff. I had 2 babies at the time, and I had child support, and I had a mortgage, and I had groceries, I had food, I had everything I had to pay for. Fortunately, I had a small severance. That just waked me up a little bit. Without a savings account for these types of emergencies, I was really stressed. Now, fortunately, that first layoff only lasted 3 months. I grinded it out. I made it a job to find a job. And fortunately, when I got laid off in October, I found a job and started a job in January of 2010. It takes forever to build up 12 months of emergency funds. Some finance experts suggest 3 to 6 months. For me, I am comfortable with 12 just because I've been laid off 4 times. My industry, which is healthcare sales, is very volatile. Things can happen in an instant, and thus I feel more comfortable having a 12-month emergency fund. Once you get 3 months, 6 months, 12 months worth of emergency savings, you have a little more cushion and a little more sense of relief. So when that next layoff comes, you're a little more prepared. My most recent layoff, which happened in May of 2024, I was not as stressed. Yes, I was getting a severance as well, but I had a healthy emergency fund. I had a little time to look for a job as well. Fortunately, I didn't have a job gap during my last layoff. I got laid off in May of 2024. I started my new job in June of 2025. With the severance that I received, I was able to just reinvest that into my brokerage account, cushion my savings account as well. So those are the 4 things that I feel like I made smart decisions over my adult years. I did start a little later, restarting everything at age 30 after a divorce, and then having to raise 2 kids was quite overwhelming. With a little bit of a focus and a little bit of mindset, saving for the future, I felt like that's where it brought me at today. I am a lot more comfortable financially than a lot of 50-year-olds in my age group. And part of that is just being mindful, being consistent. So tell me your thoughts. What's your situation look like financially? Or did you buy too much house? Did you buy too little house? What's your retirement savings look like? Comment, like, subscribe. I would definitely appreciate it. I will see you all on the next video.